Welcome back to another episode of the Daily Crypto Recap. Today is March 4th, 2022. I am Mike, and if you like this content, please give it a thumbs up. If you haven't subscribed, please subscribe to the channel. It really helps me out. It makes me feel appreciated. And now let's get into the news. So, over the last 24 hours, the war between Russia and Ukraine keeps raging on. And there was some shelling that happened around a nuclear plant in the Ukraine, and there were a lot of people that were in fear of a new Chernobyl event happening, where there was some nuclear leakage that could have had catastrophic ramifications around the world. That sent the crypto markets and the broader markets down. Just the fear, right? People get scared. They decide, oh my God, what's going to happen? Let me get my money out. I want to have my cash on the sidelines. And that dumped Bitcoin a few $1,000s. And the good news is that the fire has been extinguished. None of the 6 reactors were impacted or damaged in the fire. But the bad news is that the Russians have taken control of this Ukrainian nuclear power plant. Bitcoin fear and greed is sitting at 33 today. 33 is basically in fear territory. Over the last couple days, we were in neutral territory, and now we're going backwards and we're going into fear territory. The fear basically means people are just kind of scared. They don't know if the price is going to continue moving lower. So the sentiment in the market is that people are fearful and they're just kind of holding their money, not placing any big bets. And that's what you see in the volume in the markets as well. Looking at the markets, we have basically a whole bunch of red numbers here over the last hour. Everything is kind of falling. Bitcoin's down 0.4% over the last hour, 4% over the last 24 hours. Like I said, we've dropped from the 43,300, 43,500 to now around 41,000. The global market cap is sitting at 1.914 trillion, and we basically shaved off $100 billion over the last 24 hours. So, things are not obviously looking as good as they were over the last couple days. You see pretty much across the board down the line, you're seeing red on all the top cryptos. But if you look at over the last 7 days, we are still in profits on pretty much most of them, right? Checking the Bitcoin charts here, this is a weekly chart for the Bitcoin in US dollars. So basically every candle here that you see on this chart represents a 1-week time period. The yellow line is our 21 weekly exponential moving average. So basically this is showing us over a 21-week period what the average price of Bitcoin has been. So as you can see, as everything's rising, the exponential moving average is rising. As everything's declining, the exponential moving average is declining. Right? This is the 50-week moving average. So basically it compiles 50 weeks, says over 50 weeks, what's our average? And same thing, you'll see it move up and down over time. Now, these two lines are starting to converge, and two things can happen. Bitcoin can break out of that convergence and go up, or break out of that convergence and break down. Right now, we're in a 1-week period where we're in an uptrend, but the volume is quite low. So we're not sure moving into next week's candle or into today's close for the week and moving into next week's candle, are the volumes going to continue to be low? Is there going to be a further breakdown? Are there going to be other news events that cause any fear or additional fear to the markets that could push the markets down? Is there going to be some good news that pushes the markets up? We don't know. But what we really need to focus on is that in order to continue with this momentum, we really want to be above this 50-week moving average. We really want to be sitting above kind of 43.5, and even if we go sideways in around those numbers and we get to a close around those numbers, that's going to be a little bit more bullish for the next coming weeks for Bitcoin and cryptocurrencies at large. And the reason why we focus on Bitcoin more than every other one is because Bitcoin is roughly 40% of the dominance of the entire crypto market cap. So if we're at $2 trillion market cap, Bitcoin will be sitting around 800 billion or 850 or 870 billion dollar market cap. And basically right now everything is correlated to that. So the altcoins like Ethereum, Solana, Cardano, XRP, Terra Luna, Avalanche, AVAX, Aave, Polkadot, Matic, any of these tokens will move pretty much in lockstep with Bitcoin, but they will move more. So if Bitcoin goes down, those alternative coins, mid cap, high cap, and low cap, micro cap, will move more down than Bitcoin, and vice versa. As Bitcoin moves up, they will move more up than Bitcoin. Looking at the bottom part of this graph here, this is an open interest graph. So basically what this is this is basically saying, like, based on the future price, what is my bet? Is Bitcoin going to go higher? Is Bitcoin going to go lower? So as you see in the green, as the line goes up, that means that the people that are betting that the price is going up are winning, and the people that are betting that the price is going down are losing. So if you look at this last week, you can see that the line is moving up, which means that the short sellers, the people that are betting on the price going down, are losing or getting liquidated out of their positions. And the people that are betting that the price is going up are winning and are taking profits. But if we move this into the, I'm going to change this here. I don't know why it's not allowing me to. Oh, that's why. We move this into the 1 hour. You can see that the long position people over the last 4 hours, the long position people are losing and the short position people are winning. So on a weekly, the longs are winning overall, but on an hourly, the people betting that the price is going higher are losing, and the people that are shorting Bitcoin or betting the price is going lower are winning. So that's just an interesting thing to look at right now. Is this going to continue? And again, if you look, you see the volume. The volume is really low compared to some of these other times. If you look at the chart over time, you can see that there's higher volume, and when there's higher volume, means that there's higher demand, which could could help and aid with price. Obviously, the green candles are what you're looking for. We're looking for green candles. So moving on here, my thesis is that Bitcoin and the broader crypto markets are going to grow with time. I am not a trader. I am simply a person who believes in that this space, this market is going to grow as adoption grows, and as the technology gets better, and as it gets more adopted, as more people utilize it in their businesses, whether it be for payments, whether it be for e-commerce, as far as like a transactional type of offering like an Amazon, the actual e-commerce platform itself, not just the payment settlement layer of it, whether it's being put on your treasury, on your business, whether it's being put on your treasury as a country or an institution or a hedge fund or some type of an asset manager. This is all going to continue to grow. And this chart is kind of going to be give you a little bit of an idea of why I believe this. So this chart specifically is Bitcoin versus gold over the years. So basically what this is doing is it's comparing the price of Bitcoin to an ounce of gold. And if you look back, and we're going back here to 2010, and you look back at October 18th, 2010, and you see the price of 1 Bitcoin is equivalent to 0.001 ounce of gold. Well, And if you look at this blue line and you see that it continues to go up and to the right, over time, it continues to go up and to the right, meaning the price of Bitcoin is going up. And as the price of Bitcoin goes up, the amount of ounces of gold that one Bitcoin can buy is going up. So if we take it all the way here to the end of February 2022, one Bitcoin can purchase 23 ounces of gold. So what's going to be the better hedge? Is gold going to be the better hedge against inflation or the better store of value? Or is Bitcoin going to be the better hedge or the better store of value? If you look at this chart over the last 12 years, you can say, well, Bitcoin has gone up 850,000% over the last 12 years, close to 1,000,000%, and gold has gone up 14%, which means if gold had gone up at the same rate as Bitcoin has over the last 12 years, then one Bitcoin would still only be able to purchase 0.001 of 1 ounce of gold. Well, today, one Bitcoin can buy 23 ounces of gold. So my argument is that as time progresses, right now, gold has a $12 trillion market cap. Bitcoin has an $800 billion market cap. As time progresses, as adoption increases, as the technology gets better, as the mining network gets better, everything will continue to converge, and Bitcoin will soon overtake gold as that main store of value, that main hedge against inflation, and equal gold in market cap, or take it over altogether. And that's a possibility because mostly it's the baby boomers that are holding the majority of the gold, the treasuries in the countries, but the Gen Xers and Gen Zs, the millennials, we are all the generation that is in this digital realm, and we see Bitcoin for what it is, and we see crypto and digital assets for what they are, and therefore, as we inherit some of the aging community's inheritance, that money will then be moved and shifted and migrated into different investments. And my theory is that crypto will get a large percentage of that. Not all of it. Obviously, some people will still invest in stocks, invest in companies, invest in other types of things, real estate, things that will provide good inflation hedges as well. But I do believe that crypto will get a percentage of that, and even a small percentage will drastically increase the market cap of crypto. So in the news here, guys, we have one of the largest asset management companies in the world, Charles Schwab, files for a crypto economy ETF with the SEC. Charles Schwab has over $9 trillion under management. They've got thousands and thousands of asset fund managers and hundreds of thousands of customers. And this new exchange-traded fund will be listed on the New York Stock Exchange, the filing shows. Adding that the registration statement is expected to become effective on May 16th. Noting that the fund will not invest in cryptocurrency or digital assets directly, the fund may, however, have indirect exposure to cryptocurrencies by virtue of its investments in companies that use one or more digital assets as a part of their business activities or that hold digital assets as proprietary investments. Think mining companies, think MicroStrategy, think Grayscale Bitcoin Trust, think Square, think about PayPal, and think about Tesla that has $1.5 billion on their balance sheet. It was end of quarter 2021 was worth $1.99 billion. Today I can't speak to what the actual value is, but this is what this fund will be investing in, and it will be giving exposure to its clients because of the high demand. The clients are speaking. They're saying, we want digital assets, we want crypto. And these funds, these asset manager funds, are answering the call and coming up with creative ways to be able to provide these assets to their customers. In mining news, we have Marathon Digital Holdings announces Bitcoin production and mining operation updates for February 2022. They produced 360.3 self-mined Bitcoin during February 2022, which was a 729% increase from 43.4 self-mined Bitcoin in February 2021. Their fleet consists of 35,510 active miners producing approximately 3.8 exahash of power. The company continues to expect its mining operations to be 100% carbon neutral by the end of 2022. As you all know, ESG has been a huge hurdle for the Bitcoin miners and the altcoin miners over the last couple years. In May, June of 2021, China banned all cryptocurrency and Bitcoin mining, tanking the market 50% for the summer. And PayPal had announced that they were no longer going to be accepting Bitcoin as payment due to the energy concerns that it has with the miners. And that became a huge talking point over most of 2021. What's great about this is that the technology continues to increase and get better. The Bitcoin miners are going to be at the forefront of trying to figure out ways to harness renewable energies, to be able to utilize different energies that are being wasted off the network and the grid, to be able to help power the grid and to be able to help become the solution for becoming carbon neutral for the world, so that our dependency on fossil fuels becomes minimized over the next few years. So I believe that this is a good thing, that this exposure, that what's happened in the news, like all the negativity about this, has only helped to accelerate to make Bitcoin mining and mining in general more carbon neutral and more energy efficient. In other news, 75% of investors in emerging markets want more crypto. The data suggested that two of the major factors contributing to the broad differences in investing strategy are likely to have awareness and understanding of the crypto markets. So basically what that means is that people that are aware of it, that understand it, are going to be are going to have more demand for it, and more people are just I know what it is. 61% kind of were aware, 23% are familiar. This is in emerging markets. But in the global markets, including the emerging markets, the survey concluded that the generation with the highest proportion of crypto investors was millennials. Toluna found that an average of 40.5% of millennials surveyed aged 25 to 34 in emerging and developed markets invest in crypto. This data does match up with other similar surveys like Morning Consults, which found that 48% of millennial households surveyed owned crypto by December 2021. So to me, this is kind of important. And additionally, the Gen Zs, which are 18 to 24, reported a rate of investment just below that of millennials at 40%. Baby boomers had the lowest rate of 21%, reporting plans to invest in crypto. So to me, it's very simple. Baby boomers are older, 57 to 64. They didn't grow up with digital. They didn't grow up with computers. They didn't grow up with cell phones. What are they familiar with? They're familiar with traditional things. They're familiar with oil and gas. They're familiar with Coca-Cola, like Warren Buffett. But these new Gen Zs and the millennials, they grew up with everything digital. They grew up with an iPad or a tablet in their hands. This is just normal to them. They're in Roblox. They're constantly in the metaverse with war games and Call of Duty and the Roblox types things. Those are metaverses, but they're just centralized metaverses that people are paying for. You're paying to play, but everything is going to switch eventually, where it's going to be play to earn. where you play these same games. They have the same functionality, the same graphics, the same abilities, but now you're playing and you're earning things and you're owning things in your own world with your own avatar. And kids are already doing this every day. So it's just a matter of time before the shift goes from centralized to decentralized, giving us more power and control. In XRP and Ripple news, speaking of centralized versus decentralized, the SEC versus Ripple next decision is critical for settlement or complete victory. The SEC keeps fighting the production of relevant documents regarding ex-SEC William Hinman's 2018 speech on Ether. So what this was back in 2018, the SEC deemed Bitcoin and Ethereum to be not securities. And Ripple and XRP are fighting to have that information admitted into the courts so that they can use it as a part of their defense. And what's happening right now is that the judge had determined that that information was relevant. The SEC appealed that decision, and now they're waiting on the decision of the appeal. So if the appeal goes in Ripple's and XRP's favor, then this could bode very well for them and very well for the outcome of the case, whether it be a fine as a settlement or an outright win. Now, we don't know what's going to happen or how the judge is going to side, and we'll have to wait and see. In other Ripple news, they've unlocked 1 billion tokens, and they've moved 800 million of those into escrow on exchanges ready to be sold. They've sold 200 million of the billion to cover their operating expenses. So what's happening right now is there's an argument that Ripple is a more centralized type of platform, which is what the SEC is arguing, to say that they're a security because they're selling securities to people because they're a centralized business, meaning that they have complete control over the goings on of the going concern of the XRP token and the larger company Ripple Labs. And so the reason why this is important to me is that they have 100 billion tokens in total, and their total max supply. 50 billion of them have been released, but 50 billion are being held by the insiders and the central organization controlling XRP. Why this is a problem potentially is that if you think about a supply and demand, well, I've invested into Ripple, I bought Ripple tokens based on this price, but if someone dumps 50 billion more on the market at any given time, well, the demand isn't going to equal up to the new amount of supply that has come on the markets for sale, and that's just going to tank the price. So what's just happened now is they've put 800 million of these 50 billion onto exchanges ready to be sold. Well, is the demand going to coincide with the price? Is there going to be enough demand for that new 800 million tokens on the markets to be able to keep that price at that level, or to make it go higher, or is it going to create more selling pressure and bring down the price? Now, we don't know. Maybe they know something we don't know. Maybe this court case is close to settlement, so they're putting these on because they know the demand is going to increase and the price is going to go up. We'll have to wait and see, guys. I don't know, but I will keep you up to date when I do get that information. Finally, the city of Laguna in Switzerland is to make Bitcoin and Tether the de facto legal tender. They are aiming to become Europe's Bitcoin capital. Lugano, Switzerland, has formed a partnership with stablecoin issuer Tether to establish Bitcoin, Tether, and its own LVGA points token as essentially legal tender in the city. At Thursday's Plan B event, which was hosted by Lugano's Mayor Michel Folletti, the move was described as a de facto legalization, as the Swiss franc will surely remain the actual legal tender in Lugano and elsewhere in Switzerland. So basically, this is great. This is following in El Salvador's footsteps, and Tonga and a couple other countries that are trying to enact rules and legislation and allow Bitcoin to become either a transactable currency or deeming it specifically as legal tender. That is only great for adoption of Bitcoin. That is only great for the adoption of crypto. And I think that that's a good move for them, for these smaller cities. This city specifically has 60,000 people, and they are pro Bitcoin. We have a lot of states in the U.S. We have Miami, we have New York, we have Texas, we have a bunch of emerging states that are coming on board. We have there's so many people that are understanding and seeing what crypto is and what it can do and how transformational it is. And I think that this is just another domino in a series of dominoes that will fall in the coming years as we watch the crypto market explode. Anyway, that's it for now, guys. I hope this was entertaining for you. I hope it was informational for you, and I